The S&P 500 gapped up this morning right at the 6250 level before retracing back to yesterday's close. We found some support right off the 50-period EMA on the 15-minute chart and subsequently rallied throughout the end of the day. We can see volume was heaviest between 6250 and 6260 in the options market today, with some outlier volume all the way up at the 6300 strike, as well as all the way down at the 6200 strike. And so that makes sense, as we've been sandwiched in this zone here over the last 3 trading sessions, haven't yet broken out up to new all-time highs or broken down, breaking the trend that we've seen over the last couple of weeks. Taking a step back on our daily candlestick chart, we can see the gamma exposure concentrated at the big 6300 strike as well as the 6400 strike. And if we zoom higher up into the options chain on our gamma exposure data, we can see even all the way up to 6500 and beyond. Our gamma exposure data on a net basis is extremely positively skewed, and that's a big part of the reason why the market continues running up higher. Market participants are continue to speculate not only in the options market, but also in the equity markets and futures markets for higher prices. As we've been noting the last few trading sessions, we are cautious up here at these levels. In fact, over the last 5 days, we really haven't seen a whole lot of movement past this 6250 zone. We've also got our upper dealer cluster zone here at the 6300 level. This represents an area where dealer selling pressure could potentially ramp up and offset a lot of purchases on the long side. That could ultimately, as dealers sell shares of the underlying security, in this case it would be S&P futures, but just more broadly speaking, as dealers sell shares of the underlying security, that's going to put pressure on the price as dealers are balancing their books in the options market. So that's something we want to be aware of here at these levels. There is potential for more upside, but the risk to the downside is starting to outweigh the potential reward that we're seeing to the upside just in the near term. If we consider the larger picture, looking out into 2025, that's where a lot of these other gamma exposure levels are going to come into play. This is a lot of market participants positioning at higher strikes, 6,500, 6,600. These are bets for a continued move over the course of 2025 into year end towards these higher levels. And so for our part, we're following the data. We're continuing to initiate long positions, lock in profits where we have them, and roll our hedges up. Currently, we're looking to hedge below a break of this recent move. And so if we do get a pullback anywhere in the 3 to 5% range, we want to have some protection on in our portfolio in order to profit in the case that the market does have a temporary pullback.
Let's take a look at the NASDAQ, QQQ in particular, and we're seeing a lot of the same things with the NASDAQ that we're seeing with the S&P in terms of the overall view. I just wanted to point out we saw this sharp drop in GEX down to 125 million yesterday, and actually since then it's rocketed higher, actually to a new high for QQQ in terms of net positive GEX. But I did want to point out a couple of things looking at the chart. I have the daily chart pulled up. We'll compare this to the weekly chart in a second. We still see for the 3rd day in a row price stuck below the whole moving average, the whole acting as overhead resistance instead of support now that we've crossed under it. We're also pressing up against the upper Keltner channel again. That's the purple line here. And we're just a stone's throw away from 560, which is a big GEX cluster that we've been watching for a couple of days since this zone moved a little higher. And we're not seeing meaningful growth yet in strikes above that. So I talk about this whole moving average acting as overhead resistance. Well, interestingly, even though we're below the whole now, compared to being above the hole several days ago, we still made a new high today in the cash session for the NASDAQ. So QQQ reaching 557.57. So this presents a situation where I would normally have a short bias under the hole, but the hole is still rising, and that gives us the opportunity to see price press up against that as resistance. Even if it still holds, it may imply slightly higher prices. As Anthony was saying, we're still expecting some sort of pullback in the near term. And so what I'm watching, in addition to the NASDAQ being below that daily hole we were just looking at 57 and change, we can also use the weekly hole as a guide for what I think might be a trigger for more downside. And so if we lose 553 and close below that on a daily basis, it may imply that sometime during the week we plunge a little deeper below the line, and that may give us the pullback that we're waiting for.
Thanks, Sean. Next, let's take a look at Palantir. Palantir up 2.5% today, closing at 143.13. We've seen a big, strong up move off of this 50-day EMA just below the 130 level over the last several trading sessions, now breaking above 140 today. We see the largest game exposure at the 140 strike. Huge volume today, over 150,000 contracts traded at that strike alone. And this is a trade that we are currently in. Just last week, we entered the 135, 145 call debit spreads on Palantir, so we're well into the money on those 135 calls. And you can just see from our original post as we entered the trade, we highlighted this uptrend that had formed over the last couple of months, but really our main focus was all this game exposure at the 140 strike. We felt like a move through that 140 level was pretty likely, so we actually got that today. At the time, of course, Palantir trading all the way down at 131, so it's been a pretty significant move just over the past week. Coming back to our current chart, we can actually filter for weekly GEX by looking at the weekly contracts alone, and for this Friday, we actually see the largest GAM exposure concentration is sitting at the 145 strike. So this tells me that there is a pretty decent probability for a continuation from the high close today up through 145 by Friday. That's something we're going to be looking for. I'm looking for just a little extra juice before we close out this position, but as I said, we're already well in the money on those 135 calls, so looking pretty solid. And by the way, you can track our trades in real time as we manage our options portfolio by becoming a member at geeksoffinance.com. I'll put a link in the description below for you guys to check out.
Thanks, Anthony. Let's circle back to the VIX and see if we can spot any clues that will help us as we look at, when and if the market's going to see some sort of pullback coming up. I'll point out that the VIX monthly options expiry is a week from today. So it's the 16th, which is 2 days before OPEX. So we're looking at pre-market VIX monthly options expiring next Wednesday. We have a lot of negative GEX here at this 16 strike and virtually nothing else to show except for a few smaller clusters scattered, not very much below, but definitely above that, up to the 25 level especially. So participants are very one-sided toward the negative with the VIX. This can, in certain circumstances, become a contrarian signal. But I also wanted to point out just a couple of technical factors here using the indicators that I like to look at. The whole moving average at 16, we saw price try to break below that, and actually we hit the bottom Keltner channel on the 4-hour and then bounced back up and closed near 16 again. So 16 appears to be kind of sticky because of all of the GEX that we see. We're so close to the whole moving average, which is very slightly angled upward. I wouldn't expect the VIX right now to drop a lot below where we are. The question that remains is if we'll see an important pivot on VIX expiration next Wednesday. Sometimes we see important highs or lows made on the date of the VIX options expiring. The point of most pain at this point for the VIX would seem to be for the VIX to go higher and cause pain for all of these shorts that are at 16, especially with that target now being reached. So we'll see what happens.
And for a limited time, we are running a special promotion, $300 off our yearly Portfolio Manager tier subscription. Use code SUMMER2025 at checkout. We do have a few spots remaining, but this promotion ends soon, so take advantage of it while you can. Our members get full access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies, and you'll also get access to the premium channels in our community Discord. Our Discord community's got a ton of great traders in there sharing their own trade setups, and you can also track our trades as we manage our portfolio in real time. I'll put a link in the description below to all of that so you guys can check it out. Thanks so much, everybody, for watching, and we'll see you guys in the next video.